The stock market and the economy function differently and measure different things. While they are connected, the stock market is a leading indicator of what investors expect, where the GDP is lagging indicator of what has actually occurred. And the GDP actually shows you what the economy is doing. Now, there are other factors that are not calculated, which is happiness, just livelihood, pressures being relieved and easing your life. Those measures aren't even calculated. Investors invest in the market determining where the economy is headed, not where it's standing. So that analysis that you hear on the stock market, it's booming. Oh, we're going to make so much money. The futures are looking good. CapEx investments are showing immense growth. All that doesn't really project where we are right now at this moment. The economy at this moment is separate from the stock market, and that evidence is we're looking at the jobs market in March. 178,000 jobs were created, which is a healthy economy. But in the sense of the Fed, this beat was concerning because now there's no point in cutting interest rates, because if jobs are maintaining, why would we cut the interest rates? So that's why the economy right now is good news, is bad news. And the stock market is heavily influenced by specific high growth sectors that do not represent the entire workforce. So if AI is booming, that doesn't mean manufacturing is necessarily moving, and other jobs that are dominant in the industries of the US. As far as global versus local goes, GDP measures domestic production, but many companies in the S&P 500 are global. A company's stock might rise due to explosive growth in North Asia, such as what's happening in South Korea. They've seen up almost 60% year-to-date returns, which is insane. Even if the U.S. domestic economy is slowing, this precision and global exposure allows investors to decouple from local economic conditions by moving into specific international markets. The divergence in the stock market and real economy has profound implications for social stability and the growing divide between different economic classes. Since the stock market represents only a small portion of population, specifically large publicly traded corporations and institutional investors, its success often masks the daily struggles of the broader workforce. For instance, cost of living versus asset prices. While investors may celebrate a relief rally or a boom in the market based on potential peace talks or future stability, the general public continues to deal with the immediate reality of raising their prices on a daily basis. The portfolio doesn't matter in the real world when it comes down to those day-to-day expenses.